Wonderful good day, ladies and gentlemen, Commodity TV, and it's interview time and it's technical analysis time. I'm very happy here and proud to have a guest here who is living nearby Munich, Florian Grummes. He is the founder and CEO of the Midas Touch Consulting and works also exclusively for Pro, and he's, I would say, one of the best German chart technicians, especially for gold and silver. And we spoke about gold and silver 2 months ago, where gold hit the low of $1,071. So now today we have him here, and gold is up now at 1150. So hopefully this is the sign of a trend, of a new trend, which is going from the bearish side to the bullish side, and we want to talk about it. Florian, hi, thanks for coming.
Hi, Jochen. Thank you for inviting me.
Well, what are your chart stars are telling us for gold? Let's start with gold.
Okay, well, it's actually looking much better now. My gold model is in a bull mode, strong bull mode, short term. We have lots of good signals at the moment. Gold has been running up to 1155 yesterday. There is a downtrend line from the two highs of this year. So that's why we've seen this little setback today. I think we came back $15, and gold has to break through this 1150, 1155 resistance. If it does, we will have immediate upside potential. I think the 200-day moving average around 1179, 1180, which is also former support, now obviously resistance zone. And if gold makes it to that number, I could imagine within autumn maybe even $1,200. Overall, it's still not clear, technically speaking, whether we have seen the low for this bear market, whether it's really over. But the picture is definitely improving, especially the higher low in gold. I think $27 is the last low higher than the low in July.
Which helps a lot, yeah.
So that's a very positive sign, I think. But I think it's too early to really say the bear market is over. So it could be still just another bear market rally. And I think if gold makes it clearly above 1200, we could expect to see some larger recovery, and we could talk about maybe 1500 within the next 2 or 3 years. But right now, gold needs to make it above 1155 and 1180.
Okay, what do you think is needed that really this bear market is done? What do you think? Capitulation, or? I mean,
well,
that is running down the streets already. So
no, that's the big question. How does a bear market typically end? Normally, I mean, that was my expectation, or that would be typical. You have this panic sell out, everybody is throwing in, and you have these really downside spikes, and then you get a V-shaped recovery, something like that. That would be typically for the end of a bear market. But it doesn't have to be like this. It can also be, and that's something we're seeing now, more kind of a grinding higher. And let's see. I mean, the sentiment is beaten down in gold, no doubt about. The commitment of trades are still constructive, very constructive for gold. We have a positive seasonality right now, and we're making higher lows. And now we even made a higher high last days. So if gold takes out 1170, we also have a higher high on the daily chart, and that's an uptrend. So
super. Okay. Short question about the little brother silver. What's the situation there? Because I think it's a bit more negative, right?
Yeah, it's a little bit disappointing because silver made a new low in September, while gold made a higher low. So silver went below the lows from last December even. So I think that was kind of a surprise. I thought that silver should be stronger, and when we get this trend, the overall trend change, I was expecting silver to run before gold. So, and that didn't happen so far. So the gold-silver ratio still is kind of deflationary, and silver is bouncing back and forth, making big moves within one day, but then coming back, basically giving back all the gains from the other day. So it's not really helpful right now, the little brother silver, I would say.
So, but you think this may change quite soon then?
We could get, if we get a similar movement like in palladium that we've seen the last couple of days, that would probably give a clear indication, and that could bring a buy signal for the gold-silver ratio, which I think is very important. And this ratio is basically moving sideways since nearly a year, between 70 and 77. We had a couple of breakouts, but they all didn't work. It all came back, and it's still in this sideways zone between 70 and 77. Once this ratio breaks out below 70, that's a clear inflationary indication, and that would be very positive for the whole precious metal sector. So
Super.
that's what we need from silver. Yeah.
Okay, so let's hope it breaks down. Florian, thank you very much.
Yeah.
Much better, yeah, a little bit more bullish than the last time when we
Yes.
were sitting in our other studio and we were totally depressed. Honestly, I was depressed too. And yeah, so we will talk maybe in 1 or 2 months about it, and then let's see what happens.
Yes.
Keep fingers crossed that it goes up finally.
Yeah, let's see.
Yeah.
It has to stay above 1110. If it does
Yeah.
stay above 1110,
Okay.
we're on
good shape?
on up. Yes.
Super. Okay, thank you. Yeah, ladies and gentlemen, that was Florian Grummes from Midas Touch Consulting and working for Pro Aurum. And as said, he's one of the best chart technicians in Germany for gold and silver. And yeah, finally he turned a little bit more bullish. Yeah, I hope this helps the market too, because the last time when he was so negative, it went down a lot. So now we are hopefully coming in a new upward trend. Well, it's still unsecure, but we have to cross the boundaries 1180, 1200, 1220. Longer term, he thinks $1,500 in gold. That would help a lot also for the mines, yeah, to get back to earn money really if you are denominated in US dollars or also Canadian dollars. And yeah, let's wait and see. We will talk to him again in let's say 4 to 8 weeks. Thanks for watching us. Bye bye from Munich.
Bye bye.